Hello, everyone, and welcome to another Wall Street for Main Street podcast. Joining me today will be a friend of mine and a frequent and a returning guest. His name is Rahul from Alternative Investors Hangout. Rahul, welcome back.
John, thanks for having me on again.
You're welcome. So first thing I want to get into, what everyone's been talking about is when's the Fed's going to taper. The funny thing is I was actually visiting a family member of mine. I don't want to say who and give the whole day's story, but talked to a family friend, and he works in the Wisdom. I forget what financial center, but it's like a family brokerage thing, and he was talking about how they were disappointed that the Fed didn't taper in September and October. And now a lot of people I know from my day job as an analyst at another firm, they're convinced that a taper is going to happen next year. Do you think they're going to taper?
Well, you have to look at the phony baloney unemployment numbers that the government reports. So their target is 6.5%. If it heads below 6.5%, you may potentially see a taper go on. I don't think they are going to raise the Fed funds rate. But you have to remember who's on the voting committee next year. And there are a lot of doves. Obviously, you're going to have Yellen, and then Dudley from New York. He's a dove. You have to see that they're getting a new guy from Minnesota. I can't pronounce his name. He's a dove. And then there are a few others that are doves as well. And then the only individuals who are, how you could call it, hawks, the guy from Dallas, Fisher, he's going to be a guy voting next year. I think Plossard, or however you pronounce his name, he's going to be a dove. I'm not a dove, a hawk. But if you look at the chart, there are more individuals that are doves than hawks. So based on that fact, it sure looks like that they will not taper unless you start to see this phony baloney unemployment number go below 6.5%.
Well, the other thing is, I look at it and I see their inflation target. Of course, we know that's not the real inflation rate, is 2%. And Janet Yellen made a commitment to that 2% inflation. Do you think if they hit the unemployment rate, but the inflation rate's low, that they'll still continue with the easing? Or do you think they would actually taper with that?
Well, that's a good question. You have to look at these hardcore Keynesians, and they're telling us that we should target the inflation rate to NGDP, aka nominal GDP. And nominal GDP is roughly around 4%. And you have to remember that Janet Yellen is a super Keynesian. And based on that fact, I wouldn't be surprised if she goes away from that 2% number and maybe targets nominal GDP, roughly around 4%. But then you have to remember that the CPI is clearly telling us the wrong inflation numbers. I did a video yesterday stating that, number one, you have other inflation numbers, such as the Billion Price Index of MIT, stating that the inflation rate is 2%, while the CPI is saying it's roughly around 1.2%. But both of those price indexes do not measure, number one, the packaging size and quantity size of the products that we get. So both of those numbers are understating inflation. So they're going to cook the inflation numbers as they are right now. And in addition to that, you have to look at the inflation numbers. For instance, they state that for health insurance, I saw this off of Carl Denninger's site and looked at it myself, that 0.6566% of the expenses go to health insurance. So if you're a guy making $40,000 a year and you're paying roughly around $1,800 a year in health care premiums, probably around $150 a month, well, that doesn't make sense. It's way more than 0.6566% of your income. So they're definitely manipulating the inflation numbers left and right. So you could still see the inflation rate at 2% as the CPI states it, but it's clearly going to be wrong.
Yeah, I definitely agree. And they always like to change the basket of goods or take out food and fuel and everything. And So what do you think a Yellen Fed would look like? Do you think they would even attempt to taper at some point? Or do you think, like, I read somewhere that she might change the unemployment numbers to 5.5%. So do you think it's possible they would taper? Or do you think it would be typical government where they are always changing the rules?
Once again, that is an interesting point as well. I also read that they may be looking at 6% unemployment on Larry Kudlow's show. But if you want to see what Janet Yellen's going to do in the next few years, look at a tweet by Charlie Evans, the Fed guy out of Chicago. He stated that he would like to see Fed printing at $1.5 trillion a year. I'm not joking about that.
Wow.
Yeah.
Oh,
Do the math. Yeah, I'm serious. So if you do the math, that's roughly around $125 billion a month. Yes, Charlie Evans is not voting next year, but if you have super doves like the guy from Minnesota, and Yellen is a super dove, Dudley, a former labor union guy, a dove, I wouldn't be surprised if they go to $125 billion a month. But then, if they do print that much money, you're going to see all this hot money go into the stock market. The stock market, in my opinion, is starting to get bubbly in some sectors. For instance, if you're looking at some of these PE ratios of these stocks, such as Amazon, it's roughly around 1,300. If you want to look at LinkedIn, over 700, Netflix, around 300, Yelp, I don't know, it's around 300. The list goes on and on and on. And Twitter, I mean, it's a ridiculous PE ratio based on what I saw. So,
well,
go ahead.
Go ahead.
Okay. Based on all of this, they're going to see a stock market getting out of control, and what that would mean is they would eventually have to taper, because if they do not taper, then this could be a Zimbabwe-type stock market, or it could be something like we saw in Argentina. Probably not Zimbabwe, but something like Argentina, where you just see nasty inflation just getting out of control. So they need to take the punch bowl away at some point, but based on these guys like Janet Yellen, it's really hard to determine that.
All right, and I have a question. What do you think, this is one of our favorite topics and our audience's favorite, what do you think this means for gold? Where do you think it will go in the short term? And what do you think it means for gold in the long term?
Short term, I'm bearish on gold and silver, even though I am long silver right now, and one of the ETFs I'm long. And the reason why I am bearish is that you're going to see you may see tax loss selling at the end of the year. You've talked about this, I've talked about this, I think Jason has talked about it as well. And the fact is that a lot of portfolios are doing well this year, and the laggards are gold and silver. So what they may do is they want to pay less in taxes. You could see gold and silver going down. You also see all this negativity in gold and silver. And if you look at the volume of some of these ETFs, like the SLV, there's virtually no volume right now. And if there's no volume, then guess what? You could continue to see downside pressure in gold and silver. But now next year, with Janet Yellen, and when you see tweets like they're going to print $1.5 trillion a year, it's not guaranteed, but when you see tweets like that, gold and silver may go up based on that. I believe that they will go up when you see that much amount of printing. Initially, they may do $100 billion a month, and if they do that, gold and silver will pick up. And if they do not pick up, then that hot money is probably going to go to Bitcoins. I mean, you've seen Bitcoins. It's gone up from $200 to $800 quickly. Even though it's gone up this quickly and you could see it potentially fall in the near term, if gold and silver don't go up next year, Bitcoins, in my opinion, is going to go up.
Well, yeah, I personally think they might let gold and silver go up, because the last thing they want is to see Bitcoin even go more parabolic. And that would become definitely the alternative currency. So I think they might have to let it go up. But I also think, do you agree with me? I think one of the reasons Bernanke's talking about tapering now, and I think his December speech is going to be hawkish, is so like you just said, it could get bubbly, the valuation. So he might have a real hawkish and then initiate tax selling last season. So the stock market would cool off a bit. Do you see that scenario coming up next month? Or it's not a prediction, it's just a guess or whatever.
Yeah, I always thought about this the first time around. I thought he may have just done a tapering situation and just handed it off to Janet Yellen just to say that, hey, I started this process, and then Janet Yellen came in and she started with all this money printing, and it's not my fault. I tried to save the system. So you could see Bernanke say that, you know what, it's getting a little bubbly right now, let's taper. And with that in mind, he knows that Janet Yellen is a super dove, and she's going to reverse that tapering. I had a feeling like that, but I was wrong in September and October. But, yeah.
The year's not over.
Yeah, the year's not over. But based on what we've seen, or all the board members, once again, that are voting for it, it looks like they will not taper. I mean, you're seeing all these mind games being played by the Federal Reserve, saying that we're going to taper one day, and then the other guy comes out saying that, oh, no, we're not going to taper. And I look at it as there are more doves than hawks, and Bernanke may say that he wants to taper, but at the end, the guys who are voting are going to say, no, we want to not taper.
All right. And one thing I want to switch on is that you actually did a video on the Obamacare train wreck. And can you explain a little bit of that, just in case anyone on our audience didn't see that video?
Well, in 2009, 2010, I had a lot of arguments with many hardcore leftists and progressives, and a lot of this talk that I had with them got emotional, and they started, like, name-calling me, and they started to say that I was an idiot, I didn't know what I was talking about, you're wrong, you libertarians and conservatives are kooks, and whatnot. And what I told them was a simple fact that if you artificially increase the demand of a service such as healthcare without increasing the supply of physicians or hospitals, the list goes on, then you're going to either have higher prices, or B, what you're going to have is distortions in the marketplace. And we're already seeing higher premium prices right now, and you're also seeing you're seeing more distortions in the marketplace. And the other problem is, if you go to Forbes, an article was done, I think, by this one physician, and he stated that in the state of California, you have a lot of the elderly signing up. Not elderly, but a lot of people that are older than us, age 45 to 64. And they roughly consist of more than 50% of the enrollees. And only a quarter of the people are of that age in California. But what I'm trying to get at is, if the trend continues in California where the sick are signing up in large droves, and younger people like us, who, number one, still have our health, and we're not going to pay for those higher premiums, then you're going to see a Ponzi scheme develop. Because, number one, what you're seeing is you're not seeing a lot of young guys going to sign up after this fiasco when it comes to Obamacare. And they need a lot of us to fund these older guys who are sick and who have health problems. And if you're not doing that, then you're just going to see higher premiums across the board. So it's a disaster just waiting to happen.
Yeah, well, not only that, what people forget is young people don't even need health insurance anymore, because you can't be denied based on pre-existing conditions. So all people like me and you have to do is wait till we get sick, and then once we get sick, then we'll sign up and get all the treatment. And then the funny thing is, once we're done, we get all the treatment, we're healthy again, we can just cancel our policy.
Yeah, it's one big mess, and these progressives, I don't know why they even wanted to pass this healthcare bill, because the problem was not the free market. The problem is that the government subsidized health insurance back in the day, and since they subsidized health insurance through our work, well, that totally distorted what insurance was all about. And now what you can do is what you said. When you get sick, just sign up for health insurance, and since you won't be denied of a pre-existing condition, it's totally going to screw up this situation. And in the long term, I see the United States going to a single-payer system, unfortunately. And hopefully we don't see that, but the way that it's going to roll out with these prices, that's probably the Keynesian solution in the long term.
Well, I hope you're wrong. I don't see how they can do it. They can't even run a website, much less a healthcare system.
Yeah, I mean, that is true, but it depends who comes into power like 20, 30 years down the road. I mean, if healthcare costs continue to go up this way, what these guys in power are going to do is saying that, hey, the government needs to come in to alleviate these problems. They're not going to go the free market way of, number one, having interstate competition, or B, reducing the rules and regulations to, number one, turn this system into a cash-basis system, which used to be the way back in the 1920s and 30s when healthcare was a lot affordable. And many of the middle-class people did not have to go bankrupt when they had health ailments. So we're not going to go the free market way, in my opinion, unless maybe you get a Ted Cruz. But then if you get a Ted Cruz in office, you need to have a lot of guys that think like him in order for the system to go towards more of a free market situation. But once again, it seems like we're going to go hard left and maybe towards a single-payer system down the road.
All right. And my last question is about your YouTube channel. I think you've had it for roughly 2 years. Am I correct?
Yeah, it's going to be 2 years as of December of this year.
So I have a question. I was going to say, can you tell us a little bit about your experience, the benefits of having your own channel, and just what inspired you to do it?
Well, in 2009, 2010, I used to argue with many people, family members, and I argued with a lot of guys on the hard left. And it got really frustrating arguing with these guys because they did not seem to listen to what I was talking about. And they always reverted to name-calling. The list goes on and on and on, typical what progressives do. So I wanted to start this own channel to educate people, to learn more about the problems of fiat money, to learn about the gold standard, to learn about the dangers of progressive policies. That was the goal of my channel. I didn't expect my channel to get 2,000 subscribers. It may not be a lot, according to some other channels, which have 10,000, 20,000, 30,000 subscribers. But the goal of this channel is to help educate others. And it's good to see like-minded individuals comment on my blogs, and then I get to actually find people like you, Jason, Mo, list goes on, people with similar beliefs. And it's great to see that there are many people that think like me, and it's just that I'm not the only one, because I thought that I was one of the few that thought like this. But when I got into YouTube, I found many people that actually think like me.
Yeah, and it actually looks like, if you look at the ratings and everything, it looks like the internet media is the future of media, and journalism could be the biggest growth story in terms of creating more. They talk about in Wayne Allen Root's book, The Ultimate Obama Survival Guide, he talked about the most millionaires were created during the Great Depression. Seems like journalism might be that modern day growth. I don't know if millionaires will be created out of journalism, but new products and services.
Right, I totally agree with that the alternative media is going to be at times a great source for many people who are frustrated with the mainstream media. But you have to remember, some of these alternative media channels and websites, a lot of it reminds me of the mainstream media. There's a lot of sensational going on some of these channels, while some of these other channels are just fantastic. So yes, you do see a growth in alternative media, but people have to be aware of some of these very, very sensational channels. Just as a side note.
Well, it sounds like the boom bust. There's a boom, and then there's a recession. That gets rid of the excess.
Exactly. So they're going to be purged out.
Yeah, so it looks like we're in the middle of the alternative media recession. All right, and if people want to find out, thanks for coming on, and if people want to find out more about you, how can they do so?
Yeah, they could go to Alt Investors Hangout on YouTube, and they could subscribe to my channel so they could get their videos to their YouTube inbox.
All right, yeah, sign up. It's a great channel. It's not just interviews. Rahul interviews a lot of experts. He also posts interviews he likes. He may not necessarily be in them, and he does commentary. So check it out. So, and by the way, if you like this video, don't forget to hit the like button and subscribe so you can hear more Wall Street from Main Street podcast.